Today is Sunday, April 13th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and let's get into it. We'll get started by recapping the events that happened since my last update. On Thursday, the initial jobless claims came in right at expectations at 223,000, and then the CPI report came in very well. It was minus 0.01% when the street was looking for 0.01, and then the core CPI, which strips out food and energy, came in at 0.01 when the street was looking for 0.02. So definitely a great sign to see the CPI and the core CPI both coming down. The CPI year over year came in at 2.4% when the street was looking for 2.6. And then the core CPI year over year was at 2.8 when the street was looking for 3.0. And then on Friday, the producer price index, which measures how much it costs companies to produce the goods and services that they sell, came in at minus 0.04% when the street was looking for 0.02. So definitely a big beat on that one. And then the core PPI came in at 0.1 when the street was looking for 0.3, which puts the PPI year over year at 2.7% versus the expected 3.2. And then the core PPI year over year came in at 3.4 when the street was looking for 3.5. So honestly, nothing really to complain about at all. And I'd say everything came in pretty good. For the events this week, it's going to be pretty light. All we have on Wednesday is the US retail sales, and then on Thursday, the initial jobless claims. From everything that I've been reading, most of the US consumers are worried about the economy as a whole, and they're choosing to save more money than spend. So it would be nice to have the US retail sales number come in better than expected, because that would show that possibly the consumers aren't as worried as everyone thinks that they are. We'll take a look at the VIX chart real quick before moving on to the SPY. For the last update, it was all the way up here, and the only other times that the VIX chart was higher than it was last Tuesday was during the 2008 financial crisis and the COVID-19 pandemic. It still hasn't been able to drop down to what I consider its normal trading range, but it is at least encouraging to see that the VIX dropped so rapidly after being elevated so high. Now for the SPY chart, we'll take a look at where it was at last Tuesday's close, and at that point it had crossed below the support level, which certainly didn't look that well because it would have been another 4.84% drop to reach the next support level. And then if we take a look at what happened on Wednesday, you'll see an absolutely massive spike. It was actually the best day for the S&P 500 since 2008, the best day for the Dow Jones in 5 years, and the best day for the Nasdaq since 2001. And this shows a perfect example of the importance of not trying to time the markets. It definitely sucks owning stocks in an area like this, especially after such sharp declines over the last month and a half. But for the entire history of the stock markets, the markets have never not recovered. No matter what the situation is, it always eventually recovers. Obviously, sometimes it's going to take longer than others, but if you end up panic selling down here just to buy back up here, you're really putting yourself at a disadvantage. The markets then went down a little bit on Thursday, right to this support level. It was then able to bounce off of it and make some additional gains on Friday. And where the price is now is still just a little bit below where the peak was on Wednesday. I would say the goal for this week is to not cross below this support level and try and manage to get above this resistance level. That'll put us back on track to get above this longer term green trend line, which is where the markets were before. Hopefully we're able to achieve that, whether it's through good numbers on the US retail sales or more positive tariff announcements, which should drive the markets higher. These are going to be all 14 of my current positions. Right now, Nvidia, Meta, Microsoft, Costco, and PayPal make out my top 5, and those are going to make up 54.6% of my portfolio. So we're starting to see some positive signs. Costco and Palantir both went from the red to in the green. Walmart's pretty close. It's only in the red 1.2%. And then I do still have the positions that are pretty far in the red, which are Disney, Mind Medicine, Shopify, and PayPal, which all have over a 20% loss. Nvidia, my number one position, isn't too far behind. Right now has a 17.11% loss. The plan is still to hold all of these positions. When the markets were doing good, all of these stocks were absolutely on fire. So for example, even though Shopify is down 22.16%, at this point, I really don't care because I got full confidence that that position and the other ones are going to fully recover once the market does as well. I have sort of put myself in a pickle with Nvidia and Meta. Even though I think those positions are trading at extremely cheap levels right now, they both make up over 14% apiece of my portfolio. As a general rule, I try not to let one position be over 10% of my portfolio. And as you can see, I'm already breaking the rules with those two positions. So as much as it does suck not to be able to buy at these levels, I am going to follow my strategy and not increase them anymore. Right now, I do have 94.66% of my portfolio invested, which means I do only have 5.34 sitting in cash. I would use some of that cash that I have on the sidelines for some of my smaller positions, such as Sprouts Farmers Market, but I'm going to keep that in cash just in case I end up finding a new position that I want to enter into. But other than that, I do plan on keeping everything exactly the same, and I'm hoping that this week we can get a few more positions from the red back into the green. Since Wednesday, my portfolio had a gain of 8.64%, Pershing Square had a gain of 4.9, and the S&P 500 had a gain of 7.51, which brings us year to date. My portfolio has a loss of 6.32%. Pershing Square is at a loss of 7.69, and the S&P 500 is at a loss of 8.61. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.